This is a recording we are doing as part of SIPE's Training of Trainers 2021 program, Africa Anti-Corruption Compliance program. My name is Carmen Stanila. I'm a SIPE consultant based in Bucharest, Romania. And today I will take you through the topic of anti-bribery and corruption for non-profit organizations and business membership organizations. This session will be followed by a live training that will take place on February 19. First of all, welcome to the session. I am excited to be part of SIPE's team of trainers in this program. And I'm also excited to talk about anti-corruption and bribery for nonprofits and business membership organizations. I am a big believer in the value of nonprofits, and I'm excited to be talking about this type of organizations today. Let me say also that I have over 15 years of experience working in the nonprofit sector as a manager, as a trainer, as a consultant. It is really a pleasure to talk about nonprofit organizations in the context of anti-bribery and corruption. The topics for our session today. We will start the session talking a little bit about the different types of nonprofit organizations that are out there. We will also discuss the importance of anti-corruption. We will talk about the board and the important role they play in anti-bribery and corruption in compliance. We will talk about some of the key elements of a compliance program for nonprofits, and also about some of the typical risks these organizations face and how to deal with those risks, how to manage them. One remark that I have is that some of the elements you will hear are building on the foundation that was set in the previous modules, especially modules 1 and 4 of this Training of Trainers program. And I would also like to mention the fact that I will not be covering in detail every single element in this presentation, and I don't plan to. With that, let's get started. What are nonprofits? What are they about? Nonprofits are defined according to Investopedia as businesses that have received an exemption status from the tax office, in this case the IRS, because they focus on a social cause and they provide a public benefit. In other words, the state recognizes the important work that nonprofits make, and they receive, for this reason, a tax exempt status. This is very important to keep in mind, and we will come back to this when we talk about the different regulatory risks. What kind of nonprofits are there? I'm sure that you are familiar with nonprofits. Maybe you are working with some of them. Maybe you are training, providing training or providing consulting services to one or several nonprofit organizations. So you are probably very familiar with the various types of nonprofit organizations out there. What I propose here, what we have is classification of nonprofits. This is an international classification of nonprofits from the point of view of the field of activity in which they operate. And on the right side of this slide, you have the different types of organizations. Starting from the ones that focus on culture, education, environment protection, children or people with disabilities, religious organizations, and many other types, including business and professional associations. These are one particular type of organization, and they will be the focus of the session today. Now, in addition to what we have here, this international classification from the point of view of the field of activity in which these organizations operate, each country has its own classification of NPOs according to the country's laws. And I have chosen here two examples, but I'm sure in your countries there is also a classification. For instance, in the CSO proclamation of Ethiopia, the following types of civil society organizations or non-profit civil society organizations are defined. Local and foreign NGOs, professional associations, charitable entities, mass-based societies, and consortia. Same thing in Kenya. You have two pieces of legislation, as far as I know, that are looking at the different types of non-profit organizations, starting with the public benefit organizations and ending with societies and trusts. In my country, in Romania, we have different types of organizations, and they are governed by different laws. We have a law on associations and foundations, which defines the rules for establishing and for operating a foundation or an association. Then we have a law on chambers of commerce, which is a distinct law from everything else. This law governs how chambers are organized and the conditions for establishing one, and everything else related to chambers of commerce and industry. There is also in my country a law on employers organizations that again defines the conditions for setting up and for operating an employer's organization. So different countries have different rules and different ways of looking at nonprofits and at classifying them. Regardless of the country and specific legislation in place, it's also worth looking at some of the common elements. Non-profits, whether you are talking about a foundation, a business association, a chamber, have a set of characteristics. And these characteristics have implications for these organizations in terms of vulnerability to bribery and corruption. Let's look at the elements. Well, these are organized groups. They are private, and they are self-governing. And what does it mean? It means they have their own internal rules for electing leaders. these rules have been defined by the organization founders and sometimes also adapted, adjusted, modified later on during the existence of the organizations. Non-profit organizations have what is called a non-distribution constraint, meaning that they are not distributing to the founders whatever surplus there is in the organization finances or bank accounts at the end of the fiscal year. Unlike in a company, which can offer dividends at the end of the year. So this non-distribution refers to the surplus that is left in the organization at the end of the fiscal year, after it completed activities, paid everything at the end of the year. They are voluntary organizations, meaning that they rely a lot on volunteer leaders and volunteers who will support them to do their work. But it also means that the participation, joining these organizations is on a voluntary basis. There is no mandatory membership, for instance, in the chambers or associations. These organizations are, or should be, mission-driven. They have a cause, a purpose for which they were established, and that guides all their work. The last point I have written in red because this is a bit contentious or not applicable to everybody. Most nonprofits are apolitical, neutral from a political point of view. I say most and not all of them for a reason. Sometimes in some countries, again, depending on the country conditions and the country legislation, non-profit organizations can be tied to political parties. Some political parties, for instance, have foundations which are closely related, closely associated with them. Another reason why I said most of them, not all nonprofits are apolitical. In some countries, in some countries, the chambers of commerce, for instance, which is a typical business association, business membership organization, the chambers are related, sometimes closely related to the state. They receive public funding. The leadership of the organization consists also of people who have been appointed by the government. And I'll give you an example. In Tunisia, for instance, the chambers of commerce are under the patronage of the Ministry of Economy, and the Ministry of Economy appoints people in the board of the chamber and provides funding to these organizations. So in this case, you know, the chambers are not apolitical and they are not neutral, because some of their leaders are appointed by the government. But as I said, these are just some examples and some cases. In many other circumstances, in many other countries, non-profit organizations, business membership organizations are neutral from a political point of view. They don't get involved in politics. Some of them actually have policies and have provisions in their code of conduct or code of ethics regarding the fact that they are neutral. They don't go into politics. All right. I was saying that these characteristics of the nonprofit organizations have implications in terms of vulnerability to corruption. And why is that? Well, I said that organizations, nonprofits, are mission driven, focused on a cause, focused on the cause that they were created to focus on. This means that they spend more time and dedicate resources to achieving their mission, fulfilling their mission, and not necessarily focus on the risks they face, including corruption risks and bribery, and how to manage those risks. Nonprofit organizations are also susceptible to conflict of interest, which is a particular conflict of interests different from the one that companies, for-profit entities deal with. There's also, in some countries, a weaker regulatory framework and less accountability. Again, it depends also on the country conditions, but it also depends on on each organization. But what we see sometimes, there is less accountability and less focus on accountability. Another element is related to internal controls. How strong are these nonprofits when it comes to internal controls? If you are still a small organization, a small nonprofit with limited resources, probably you want to get the work done, you want to fulfill your goals and to achieve your mission, and internal controls are not, unfortunately, in the top priorities. So this creates additional vulnerabilities. I spoke about resources. Some of these resources also include technology. How strong is the organization from the point of technology? How vulnerable or safe is it, for instance, in the face of cyber attacks, in the face of phishing? How prepared is it to deal with such things? Another element to keep in mind is that in the nonprofit sector, there is quite a high staff turnover. For instance, in the US, I read a study about this. The turnover of staff in the nonprofit sector was 19%, which is huge. Think about how much time you need to introduce the new staff to the organization, to make sure that they understand what are the values, what are the procedures, what are the policies, to get them up to speed. And then once you do this, some of them may leave. So you have to start all over again. How much time, how many resources do you have to invest in this? Plus, volunteers. Nonprofit organizations rely a lot on volunteers. How do you know what your volunteers, what values they have, how they behave, to what extent your organization is not vulnerable because of your volunteers? So all these elements related to the characteristics of nonprofits make them vulnerable to bribery and to corruption risks. And talking about vulnerability, here are some examples. One such example, unfortunately, is that of Oxfam, which is one of the biggest charitable organizations in the UK. And they have been involved in a huge scandal. It has been in the news. in 2019, 2017, and even 19, because some of his staff, which worked in Haiti after the earthquake in 2010, which hit Haiti. So some of these staff used the service of prostitutes, and some of these were underage persons, women. So you can imagine the big scandal that erupted when the media found out that there was an internal report, but the internal report was kind of, you know, covering the misconduct and everything else that happened. So this led to resignations among the leaders of Oxfam. This led to investigations by the police and prosecutor's office, and this led to loss of funding for the organization. Another example that I would like to share is from my own country, from Romania. And it involves the Chamber of Commerce, and it involves the Chamber of Commerce of Romania. So the former president of the Chamber of Commerce and Industry of Romania was sentenced a few years ago to 5 years in prison for what? Well, he received 200,000 euro from a businessman to interfere in a case that was under review by the arbitrage court. Yes, Imabong, did you have something? Another example, unfortunately from Romania, involving a non-profit organization is that of the former Chamber of Commerce and Industry of Romania. The former president was sentenced a few years ago to 5 years of prison for what? Well, he received 200,000 euro from a businessman in order to interfere in a case and obtain a favorable decision in the case that was under review in the arbitrage court. So commercial dispute, the court for commercial alternative commercial dispute resolution. And unfortunately, this is not his only. He's not only misdeed. He was investigated also for other things, and maybe we'll have the time to in the live session to come back to his example. Other examples, these are unfortunately not isolated events. Other examples also include organizations from the US. For instance, Feed the Children, that's an organization based in Oklahoma City. The former president and CEO complained a few years ago to the board of the organization that the nonprofit was misusing funds, and he raised concerns about a huge salary paid to the chief operating officer, huge as in $300,000 per year. And he was this gentleman who was chief operating officer. He was also the president of a trucking company that coincidentally was the chief carrier for the organization. So this prompted official inquiries and lawsuit. The former CEO started a lawsuit. Another example, a high-profile case again, involves a foundation headed by the Hollywood star Leonardo DiCaprio. What happened there? According to the Justice Department, certain donations that his foundation, DiCaprio's foundation, received came directly from an embezzlement case of $3 billion embezzlement. This amount was siphoned from a Malaysian sovereign wealth fund. And some of this money went to finance DiCaprio's foundation and the charitable activities of this foundation. And also some of it, it seems, went to fund DiCaprio's pet project at the time, The Wolf of Wall Street, the movie. So again, an example of nonprofit organization being in the spotlight for the wrong reasons. So I think this makes it, all these examples help us make the case about why nonprofits in general and why business membership organizations should care about anti-corruption compliance. Well, of course, first of all, it's about reputation. It's about reducing the risk of fraud and abuse, but also the risk of penalties, lawsuit, and everything else that it entails. It's also about preserving their funding, because in the case of Oxfam, the scandal following the event in Haiti caused the organization to lose significantly its donor support. People didn't want to be associated, didn't want to support the work of an organization whose staff is misbehaving, who is not using their better judgment when it comes to making decisions. And one thing to consider is when we talk about anti-corruption compliance, let's think about what are the long-term benefits for the organization and not get stuck in how much it costs to put in place a compliance program, to put in place policies and procedures and all the systems that help the organization and its leaders to maintain ethics and integrity and to stay away from corruption and bribery and everything else. What is, I mentioned the leaders of the organization. What are they supposed to do? What is their role? Well, we talk about, and I'm sure you have heard in all the other modules in this training of trainers program, you heard my colleagues talk about tone of the top. What is this about? What is tone of the top? What do we talk about? We talk about the climate, the general ethical climate of an organization that is set by the board, by the president, by the CEO, by the upper management. We talk about people who understand the organization's corruption and bribery risks, and they develop capacities and systems to mitigate those risks and improve. We also talk about people who set an example when they say we are committed to behaving in an ethical manner. This commitment is not only in word, it is also reflected in their actions and in their decisions. They set the tone, they determine the organizational culture, and they give an example themselves. And last but not least, they set up compliance infrastructure, anti-bribery and corruption compliance infrastructure and function if possible. Let's continue to talk about the leaders of the organization, the board, and look at what are their legal duties. Well, these duties can be classified as follows. First of all is duty of care. What is this about? Care for what? Care for the organization, prudent use of its assets, whether we are talking about facilities, whether we are talking about human resources, funding, but also reputation, which is a significant intangible asset of a nonprofit. Then duty of loyalty. What is loyalty about? This is about making decisions in the best interest of the organization. Among others, this is about recognizing and disclosing conflict of interest. And a third duty is a duty of obedience. Obedience to what? Who are they obeying to? This is about following the laws and the regulations of the country or countries in which the nonprofit organization operates. But it's also about following the internal rules, internal policies, following the provisions of the bylaws, following the mission of the organization. If there is a code of conduct or a code of ethics, abiding by the provisions of this code. And going on with board responsibilities, these I find sometimes are not very well known. First of all, the board of directors of a nonprofit organization is responsible for determining why the organization exists. What is its mission? What is its raison d'etre? What is its purpose? So determining the mission, the vision, the goals. They are also responsible for planning. They are responsible for selecting and evaluating, hiring, and if necessary, firing the executive director. Not micromanaging the staff, but selecting and evaluating the executive director or the CEO. They are responsible for the budget. They are the ones who are to review and approve the budget and the action plan. Another responsibility, which is I find often overlooked, is board is supposed to bring resources, financial resources to the organization. And sometimes in some countries and in some organizations, the board is the one who brings the money up front. They support the operations through their own contributions. This is a model. It's they have to be commended for their support, but this is not a functional working model, a viable one for the long term. They are supposed instead to rather help the organization get the funding, help them obtain sponsorships, help them participate in bids, help them secure funding, financial resources, not spend financial resources as we see in some organizations with travel stipends and allowances and so on and so forth. So this is not exercising their responsibility towards the organization. And another major responsibility of the board is related to compliance. They are supposed to ensure legal and ethical integrity. They are ultimately responsible for the adherence to the legal standards and ethical norms of the organization. All right. We talked about the profile of the organizations. We talked about some of the examples of nonprofits that have been in the public eye, involved in various types of scandals related to misconduct, unethical behavior, and sometimes fraud, bribery, or other misuse of funding and so on. And we talked about the leader's role and how important it is for them to set the right tone and to fulfill their legal obligations and their responsibilities as board members. Let's talk now about some of the elements of a compliance program. And I'm sure, again, you have gone through this with my colleagues in the previous module, so we will not spend much time on this. First of all, the first element is prevention, okay? Putting in place conducting, first of all, the risk assessment to see what are the possible risks, but then putting in place policies and procedures to mitigate those risks, and informing, training, and communicating about this to the members, to the staff, to the board, to the vendors, if it's applicable, to the people concerned. If the second step after prevention is detection. We have a beautiful system in place, but still we detected a problem. We detected a case of potential or suspected abuse, fraud, anything else related to bribery and corruption. So this is about detection. This is a phase in which something happens. So it's important to detect it. And this is where all the what we call compliance infrastructure helps, all the systems or the policies, the compliance function, if that is the case, or the person in the staff of the nonprofit who is responsible for or has received responsibilities related to compliance. This is where they step in. This implies also monitoring of what's going on, and we'll come back to this a little bit later. And if we detected an incident, what do we do about it? How we respond? So prevention, detection, and response. Dealing with a suspicious incident, dealing with a report, handling the inquiries, handling the the information that we received about something that happened or is potentially happening. These are the key three steps, key three elements. And talking about corruption risk assessment, this is a tool that helps identify weaknesses and helps identify opportunities for corruption, for corrupt behavior that may occur. And it's not only about what is happening, it's rather the potential, the perception, not necessarily the existence of an incident of corruption. And when we talk about risk assessment here, we analyze each and every risk from the point of view of the likelihood, how probable it is that this will happen, but also what is the impact, what are the consequences on the organization if that corruption risk materializes. And we saw in the examples earlier, what is the impact? It can destroy donor confidence. It can undermine the role and the mission of the organization. It can undermine its impact. It can create animosity among its members, among its beneficiaries, and so on and so forth. When we talk about anti-bribery and corruption, we can think about risks and areas of risk in three major categories. One is people. The first one is people risks. The other one is regulatory risks. And finally, business risks. Now, I would like us to invite, I would like to invite you to take a minute and think about an organization, a non-profit organization, an association, a foundation, a think tank, an organization in which either you are a member or a trainer or a consultant, or simply an organization that you are familiar with, and see if you can think about one risk in each of these three categories. And please write this down. All right. Ready? Here are some examples of such risks in non-profit organizations. People risks. Probably the first examples that come to mind are bribes and embezzlement and facilitation payments, which unfortunately are very common in some countries. Another example is conflict of interest, political contributions. Advocacy is another area in which you have risks as non-profit organizations. Remember the case of the former president of the Chamber of Commerce and Industry of Romania. Besides the case related to interference in a case under review by the arbitrage court, he was also investigated for another action. He was trying to influence a legislative change in Romania in favor of chambers of commerce, and he was trying to influence an MP, a member of the parliament, and he was under investigation because there were question marks about how transparent or non-transparent was he in his efforts to influence decision, and if there was any money involved in that attempt to influence public decision. So advocacy is an area where nonprofit organizations are also vulnerable to bribery and corruption. Gifts and entertainment. Are there any other areas related to nonprofit people risks? Can you think of others? A second major category is what we call regulatory risks related to the status of the nonprofit. Remember at the beginning when talking about the characteristics and what is a nonprofit organization, I mentioned the fact that they are tax exempt. They don't pay certain taxes because they work for the greater good. They work for a public cause. Now, this can be used and abused, this non-profit tax exempt status. Tax regime. This is related to, again, the taxes and the implications of operating as a non-profit organization. Let me give you an example, again, from my country. In Romania, in the 1990s, there was this great wave of enthusiasm to set up businesses, to set up private businesses, because before 1990, this was not possible for 45 years. And also to establish non-profit organizations. There was a legal provision that made it possible for non-profits to import second-hand cars and not pay first registration tax, which you will pay when you buy a car, whether it's new or it's second-hand. So non-profits were exempt from paying this tax, which made a lot of entrepreneurial people who were running a business to also set up a non-profit, not because they wanted to contribute to the greater good of the society, but because they wanted to take advantage of this non-profit tax exemption. So there were a lot of non-profits which were registered, and they existed only on paper. The founders were able to import the cars, but they never conducted the activities what they had as their mission, their declared mission. Okay, the non-profits were just vehicles for them to exploit this tax exemption, this tax regime, this favorable tax regime for non-profits. Later legislation. In some countries, there are legal provisions regarding the employees of non-profits, regarding the board. So it's important to understand, to know, and to follow this legislation to make sure the organization doesn't get into trouble. Money laundering and diversion of organizational funds for acts of terrorism. This is a risk that is significant, although we don't necessarily think about it. The first time we think about nonprofits, we don't think about money laundering and nonprofit organization in the nonprofit world. But this is very real. The other thing is, like in the example that I gave you, just setting up a charity or a charitable organization or any other type of nonprofit for illegal or improper purposes. Lastly, business risks. And of course, we are talking about vendor compliance. We are talking about data security and privacy. And last but not least, definitely not least, knowing and conducting due diligence on your board, on your staff, on your volunteers, on the partners, on the donors, and on the beneficiaries. This is helping organizations stay out of trouble. And again, I feel that some of this is overlooked, and sometimes the consequences can be devastating. Again, going back to the example of DiCaprio's foundation, the donations, the funding that he received were money siphoned from a sovereign wealth fund. Would you accept money, a donation, knowing that that money was siphoned from a sovereign fund? Would you receive money from a sponsor who is producing cigarettes if you are an NGO that is working in environment protection? So knowing who these people are, knowing who these organizations are, knowing who your board members are, if they have a bad reputation, their bad reputation will automatically reflect on your organization. It's important to understand who they are and to decide if we want to be associated with them or not. What are the benefits and what are the risks for the organization? And when we talk about risks, it's about looking at what could go wrong and why, and what are the consequences for the organization. Will you end up in court? Will you be in the court of public opinion, which can be even harsher than the actual court? And also looking at the areas, the operations that can be vulnerable to these different types of risks. Is it the accounting, finance and accounting of the nonprofit? Is it the membership? Is it government relations? Is it another one? What are the areas? Where are the weak points? And here's a list of internal and external risks. Of course, the list is not comprehensive. Again, I'm sure you have talked with my colleagues in previous modules about some of these. If we talk about internal risks, we talk about stealing of organizational funds. We talk about abuse of authority, procurement fraud. This is very frequent. Collusion, falsification, and so on. Misuse of nonprofit assets, as we have seen also in the in the example of the nonprofit from the US, Feed the Children. And then we have external risks, and they come in many shapes and forms. These are just some of them, but of course the list again is not comprehensive. There is more than that. Okay, so we identify risks and we look at them. We look at what may go wrong. And the recommendation is to conduct this assessment on a project by project basis, to look at each project of the nonprofit to see what are the risks, but also to look at the operations that that are there, project or no project, on permanent basis. And once you identify and analyze the risks, what can and should you be doing about those risks? What should the leaders, or what could they do to mitigate these risks? And if we are talking about low risk, what are we talking about? Again, remember, when we talk about risks, we look at two things: how likely it is to occur, and what is the impact, what are the consequences on the organization. So in the case of low risks, what does it mean? Low risks means that it will lead to minimal financial loss, and this is unlikely to happen as the action is performed at least once in 3 years. This is how you determine what is low risk. And for low risk areas, the mitigation measures will be monitoring sometimes, or simply accepting risk without monitoring. If we are talking about medium risks, you talk about an area or action that has a somewhat significant financial loss, and then the risk is unlikely as the action is performed at least once per year. And in this case, if we are talking about medium risk, you need management to monitor, to take action to deal with this, because the consequences can be serious on the organization. Everything that is not low risk or medium risk, that will be a high risk. Again, efforts are needed from the part of the management to adopt measures to mitigate and to monitor the situation, to implement the activities and to mitigation measures, and to monitor what's going on. All right. Ideally, non-profits, just like for-profits, would be able to implement a full-fledged compliance program, anti-bribery and corruption compliance program. Now, if we go back to the characteristics of nonprofits, we saw that one of their characteristics is that resources can be constrained, can be limited. So in the case of small organizations, small nonprofits, small associations that do not have the staff and all the other resources to implement a full-fledged program, here are some elements, fundamental ones, that they can still implement with limited costs, but with great benefits. One of them is a code of conduct, and we'll talk in a minute about this. Code of conduct, or code of ethics, or code of ethics and conduct, as we see in some organizations. Then policies and procedures. Do they have a manual or several manuals with policies and procedures? I have seen few organizations that have policy and procedure manuals. I have seen one organization that has a policy manual for accounting and finance, one for human resources, and one for procurement. But this is not frequent. If you don't have the resources, if the organization doesn't have the resources to develop a manual or several manuals, at least develop some internal policies and procedures, or some of the key areas which are risky for their operations. And here we are talking about conflict of interest, finance and accounting, procurement, perhaps human resources, perhaps advocacy, perhaps gifts and hospitality, whatever is relevant, whatever is appropriate given the environment, given the types of operations and the area in which the organization carries its work. Talking about code of conduct or code of ethics or code of ethics and conduct. And just to clarify a little bit, when we talk about code of ethics, we talk about the guiding principles, the general principles that guide the organization. When we talk about code of conduct, we go into how those principles apply, what they mean in the daily life of the organization, how those principles are translated into action. Some organizations, as I said, have codes of ethics and conduct. What do these codes have in common? They have a set of values and principles. They talk about what is considered acceptable and unacceptable behavior in the organization. They provide advice on what to do in difficult circumstances, what to do, who to contact, who to seek advice from in cases of potential, suspected, or real risks materializing. And finally, they contain incentives for adhering to the code and penalties. What happens if you don't follow? If you don't if you engage in unethical conduct and practices. And I selected here a few examples of codes of conduct from Africa. First one is the Institute of Directors of South Africa. They have a code of professional conduct, which I find very interesting and a good example to talk about. What this code talks about is the following. It talks about 6 ethical principles that provide the members with guidance for decision making and for behavior, for conduct. And those ethical principles are integrity, competence, responsibility, accountability, fairness, and transparency. And what they very nicely explain what each of these means. Then they have a set of conduct principles after the ethical principles, conduct principles. Then they have a section on members' obligations and responsibilities towards the profession. And finally, a section on members' responsibilities towards the organization, towards IOD. So I invite you to look up this code. You have there the email, the website address of the Institute of Directors of South Africa. Another example, and I'm happy to share this one. I have been working with a Nigerian a network of women business associations when they developed this. This is a code of conduct, which again talks about the values, but also about the principles, and gives some guidance on how to deal with potential ethical dilemmas and ethical or unethical conduct. Finally, an example from a regional organization, the COMESA Business Council. It has developed and launched last year this regional code, which targets companies, but also organizations, and it provides guidelines for developing and implementing compliance in these entities. Again, this is available online. I invite you to look it up on the CBC website. There's also a small video that accompanies it, and I think it's a good resource to consider. Again, codes of conduct should be accompanied by policies and procedures, whether we are talking about policy manuals or simply a few policies that are relevant for the risk areas identified by the organization. And here are some characteristics. First of all, the code of conduct is broad in scope. And it applies to everybody, and it is or it can be public facing. Whether we are talking about, when we are talking about policies and procedures, these are rather internal looking. The policies are issue specific, and they can apply to the entire organization, or they can apply only to a certain area, to a certain department. And the procedures go into more details about how the policies are applied and how they can be implemented, and give specific guidance, specific steps that can be followed. All right. Talking about policies and procedures, here are some examples of key policies and procedures that are key policy areas that are specific for nonprofits. And one of the areas that came up earlier in this session is conflict of interest. This is one of the major risk areas for nonprofit organizations, for business associations, for think tanks, and other such organizations. And conflict of interests basically arise when there is a clash between, or a divergence between, the private interest of an individual and those of the organization. And when we talk about conflict of interest, it can stem from several sources. It can be a financial one, it can be a personal one, it can be a professional or a contractual one. And let me talk a little bit about a professional one, because here we talk also about conflict of duty. And what do I mean by conflict of duty? I have seen this happening in several nonprofits in various parts of the world. This means that the person who is representing and who is having authority in the organization, in the nonprofit, has professional interests that could jeopardize his or her actions and decisions made for the interests of that nonprofit organization. I'll give you a couple of examples. One coalition of nonprofit organizations, business associations, chambers of commerce, and foundations that I had the opportunity to work with several years ago was in Armenia and in the Caucasus region. And at some point, one of the three people who are part of the coordination of this network of organizations joined a similar business coalition, and after a while he got elected president of that second coalition. At the same time, he was a member of the coordination center of the first one. So my question to you is, where is the loyalty of this person? If he's a president of a newly established coalition, but he's also a member of the coordination center of the other coalition. And these are similar coalitions. Where is his loyalty? Talking about the duties and responsibilities of the leaders of the board. Where is his loyalty? To which of these two organizations? I have another example from a country in Eastern Europe. A gentleman who was the leader of a think tank, an economic policy non-profit organization. At some point, he decided to run for elections, and he got elected as a member of the parliament of his country. So, what did he do? He took his parliament MP role, but he also kept his role in the think tank. So, where is his loyalty? To the parliament or to the think tank? So these are just two examples of conflict of interest in non-profit organizations, and I'm sure you can, each of you can think of examples from your own environment, from the organizations you are familiar with. So what do we do in such a case? Because this is occurring. Maybe it hasn't occurred yet, but it will occur at some point. How do we deal with this? First of all, have a policy on this and define what is conflict of interest for your organization, for your environment. And then have the members of the board and the employees report the conflict of interest. And then put in place procedures for how to handle it if it happens. What do we do? How do we handle it? And the solution is, if that person is able to continue in their position, they should be recusing themselves from decision making in particular cases where the conflict of interest manifests itself. That's the typical answer to this issue, to this dilemma. Please record everything. Make sure to record everything, to record the proceeds, to record the decisions, to record the recusal. Because later on, when the leadership changes, when somebody is looking at your documents, when somebody is looking at your history, they may ask questions. And how are you able to respond? If you have records, if you document the decisions, if you document the processes. Another big area of risk for nonprofit organizations, for risk of corruption, is finance and accounting. And here again, what is helpful is to have in place policies, but not only have policies, but train people to make sure they know and implement those policies. Again, we will not go into all the details. You have them here. One point that I would like to spend a moment on is internal controls. Make sure there is division of roles. Make sure the person who approves the payment or the contract is different from the one who will process the payment. If possible, also different from the one who will record and report on those payments. And also good practices it's good practices to have two persons approving, dual approval requirement. Okay. Another element is audits. Does the nonprofit have any audits performed on its financial reports, on the financial records? In some countries, it is required by law. In other countries where it's not required by law, it can be required by the donor organizations. If there is not a requirement by the donors or by the law, it is good practices as much as possible, and of course resources allowing, to have every now and then to have an audit. In my country, there in Romania, there are two types of audit. One is required by law, and an independent expert looks at the compliance, looks at the documents and checks compliance with the laws and regulations. And you can also have, additionally, if you want, an extra audit conducted more in detail by professionals in the field of financial auditing. Policies on procurement and contracting. Again, this is a big risk area for fraud, for corruption, for nonprofits, not only for them, but also for nonprofits. Here, I guess the key things are, first, to allow competition, because chances are greater that the organization will get the best deal possible. Another effective tool is what we call the 4 eyes principle, meaning that a decision or a transaction must be approved by at least 2 people. And this is a controlling mechanism. This is used to increase transparency and to ensure effective controls, internal controls. This is especially relevant for high value or for high risk agreements and contracts. Okay. If possible, include anti-corruption clauses in the contract. This is good practice, and it helps the organization in case this agreement, this contract becomes problematic. You can always have an extra layer of protection for your organization, saying, look, in our contract we included this. It is here written, and they did not follow it. They did not fulfill their contractual obligations when the partners got involved in some misdeed. All right. So as part of an anti-bribery and corruption compliance program, we talked about code of conduct. We talked about policies and procedures, whether they are included in a policy manual or not. That's a different story. And so we have a beautiful system. But we need to make sure that the people working in the organization are also familiar with these policies and procedures, and they implement those, because if they only exist on paper, they are worthless. So what we do is conduct training and communicate. We conduct training, ideally short, practical, relevant to the people and to their work, relevant to the areas in which they work. And this training should be conducted on a regular basis for all the staff, but also whenever you have new staff, to make sure that they are familiar with the policies and procedures and the values and the principles of the organization. So once the organization hires new staff, it should be promptly trained on this. Such a training would help the staff, whether it is new or existing staff, to identify red flags, to understand what is expected of them, and also to help them feel confident that they can report incidents, perceived, potential, or real, when they occur, if they occur. And now, since this is a training of trainers, I have a question for you. Let's think a little bit about what is short. What is a short training? How short is short? How short is adequate? Is it 5 minutes? Is it 10 minutes? Is it 15 minutes? Is it half an hour? How short is practical and appropriate? And the beauty of the situation is that there is not one size fits all short answer to this question. Short should be determined, how short should be determined by the needs and by the situation. It may be a 5-minute reminder. It may be a short video. It may be a 15 minutes session. It may be 30 minutes. It may be an hour. If you have new staff coming in the organization, in your nonprofit, 5 minutes is probably not enough. For the staff that is there and they have already been trained before, maybe they only need a reminder from time to time. And then 15 minutes or even 5 minutes can be appropriate. Okay, so it's on a case-by-case basis. Talking about compliance training and communication, another element to keep in mind is to keep the communication channels open, to keep an open door policy so that people can come in and ask questions, or talk about their dilemmas, or talk about what they are struggling with, if it's a perceived or a real ethical situation or misconduct. Okay, in addition to training, compliance system should also comprise monitoring. And when we talk about monitoring, what do we monitor? First of all, we look at the external environment. What regulatory changes have taken place we should be aware of? Maybe we need to adjust our policies. What are the internal changes? Changes in our internal environment. Maybe we have a new policy manual. Maybe we have a new policy in the finance department. So our procedures should change accordingly. Maybe we enter into new business relationship. We enter into new agreements. So what are the changes in the third party risk profile we should be aware of and we should be monitoring? And finally, looking back at your risk assessment, at the risks that you identified in the 3 areas of people, regulatory, and business, the activities that you identified as high risk, keep an eye on them, monitor, make sure that you are aware of what's going on in those areas. So if we have not been able to prevent, but we detected some cases of misconduct, misbehavior, of ethical lapses, of maybe fraud or abuse or bribery, what do we do? we mitigate and we manage. We manage risks, and this involves also developing a reporting system where people are able to ask questions, to express concerns. And they should be able to do this in a confidential manner and without fear of reprisal. And the fear of reprisal should be the confidentiality and the absence of fear of reprisal should be clearly communicated, clearly stipulated in the policy documents, in the procedures of the organization. Do you have a hotline? Do you have a box where people can drop reports? Is it hotline where people can call and report incidents or express concerns? Do you have a ethics committee? Do you have an ethics officer? Do you have a compliance officer in the organization? What is the reporting system? Who the staff and the board can go to if they want to raise questions on concerns? If the organization receives such reports, they should conduct investigations immediately, and they should document those findings. They should document every step of their investigation. And if needed, they need to take corrective measures, discipline. Because the lack of action sends the wrong signals to the others, but it's also allows the behavior or the misdeeds to continue. And this is something that the organization cannot afford. And when we talk about discipline, it's important to introduce discipline that is proportional to the violation and that is applicable to everybody, not only to the accountant or the clerk, but also to the financial manager or the CEO or whoever was responsible in the organization, no matter the level of in the hierarchy of the organization. Again, this is about treating people fairly, but also sending the right signals to the organization staff, board, and other stakeholders. If we only go and take disciplinary measures against the lower level people, this sends a signal that it's okay. If you are in the board, if you are the leader, you will get away, which is not acceptable. This is not the right signal that you want to send as an organization. All right. So we've come to the end of this session. A few final points that are summarizing some of the things that we've talked about in this session. First of all is tone at the top, which again I'm sure you have heard before. It's important for non-profits, and it's important for profits as well. Following the applicable laws and following the internal regulations of the organization, this is critical. And having clear policies, procedures, and expectations, and communicating them to everybody. By the way, the code of conduct or code of ethics should be out there on the organization website, and it should be available to everybody in the nonprofit. In some associations, for instance, members, when they join, new members are supposed to not only pay their membership fee, but also sign on to the code of ethics or code of conduct before they are fully part of the organization. And I think that's a good way of the good way to proceed in this respect. And last point is reviewing and improving the systems, the mechanisms, the policies, the procedures all the time, because things change in the external environment, and your internal documents and your internal systems need to keep up and to be ready to address whatever emerging risks are there. This is all from me for today. I look forward to having you at the live virtual session on the 19th. In the meantime, if you have any questions or any comments, please feel free to contact me. You have my email address here. Have a great day, and see you soon. Goodbye.